Hi everyone, welcome back to Be Rich. It's me, Vinod, recording from Bangalore. I should be back in Chennai next week, and then we'll probably have some studio recording and some studio audio, quality audio back then. Till then, please do bear with me as I'm recording remotely here. And if the audio is a little spotty, I am sorry. Today, I wanted to talk about something all of us have been pondering and thinking about. Have we missed the AI stock boom? And seeing Nvidia stock prices and all the other Magnificent Seven stock prices, we are left wondering, should we have jumped on the bandwagon or not? So that is what you call the premise of this video, and we'll try to find out, should we be looking beyond the Magnificent Seven to find AI value, and what are the key enabling sectors in this AI adoption, and what are the key metrics we should be considering. Because the point is, to find real value in AI now, it's time that we look beyond these companies and we look what is enabling this AI revolution, what is happening behind the scenes. So we have always been focusing on companies with large language model, and those companies like Google and Microsoft and Nvidia chips, which are providing the hardware for this. But if we spread our wings a little bit further, we do have to realize that AI is built on the infrastructure and the peripheral technologies which are enabling AI to grow. And that is the idea behind this. Why did I think of this idea? It's something what my brother told me long ago when he was talking about hidden layers in any revolution that happens. The famous one is, of course, the gold rush which happened in California. And when the gold rush happened, a lot of miners went running across the United States trying to get there first and strike their claim on the Klondike. And yes, that was there, true. There were people who found gold, but many people lost their lives trying to find the gold. But what was incredible was the amount of towns, industries, and businesses that were on allying and built on the back of this gold rush. One of the famous brands which came out of this is, of course, Levi's. Levi's jeans, what we now famously know as a big brand and we all wear and use, was based in the history of the gold rush. So that's the same kind of idea, what I'm thinking of. So what are the key enablers in this AI revolution? Of course, we're talking about computers, PC hardware, and recently PC hardware has gone through a revival. A few years ago, before this whole AI boom, PCs were completely written off. Then more and more people were going to go mobile. Even laptops were going to die. Even tablet PCs may not become so useful because most of us were doing everything on the go on the mobile. But thanks to AI now, there has been a PC and hardware revival, and PC manufacturers and their components manufacturers allied to that are seeing a revival. The other is, of course, the semiconductors. If we look beyond Nvidia, there are other important components to chip manufacturing. Of course, advanced chip manufacturers are important, but if you look beyond that, you have memory, you have power management, you have communications, you have connectivity, all which are very crucial for AI deployment in various devices across the world. So that is another area you can look at. Then the next one which you can look at is cybersecurity, which is more important than ever now. Thanks to the advances of AI, cybersecurity and cybersecurity companies are more and more important, and they are something you can keep an eye on. Then, of course, data centers and infrastructure companies. We require robust data centers, and the powers to require to do AI is immense, and we can look at this as another area of interest that as a value investor we can dive into to ride this AI wave. So the main reason why I laid this out is to show you, for example, let's look at the company Dell. Dell is a very old company, has a long history. We know the founder. He went out and he came back in, took the company private and brought it back to public. So this is a long history, and it's not something just like an upstart which came out of nowhere. So we have a lot of history to study and to dive into as a value investor, especially a nascent investor like us, to see if we can unlock value. What is their core business? Core business right now for Dell is PCs and server storages. And the AI Catalyst has been an integral part of their revival. And the integration of AI with PC could be the drive for their new sales. And this is very true for their enterprise AI solutions. They have been teaming up and they've been creating these new enterprise solutions for AI. And this infrastructure seems to be their main impetus for their revival. And if we dive into their Q1 numbers, revenue is up 5%, EPS stands at $1.55. AI server demand is at $12 billion already, and they have back orders of $14 billion. The segment, if you see if their revenue, is Infra Solution Group, which is up 12%, and Kind Solution Group is also up 5%. Free cash flow right now, Dell is sitting as at $8.7 billion. But here's where the problem is. Debt to equity ratio for Dell is, believe it or not, at a negative 1,774%. Meaning the equities are negative and they're in heavy debt. So that is where the major pressure for Dell is. Interest coverage is 6 times. That means they're able to service their interest without much worry. So what are the red flags? The red flags, if you look at it, is of course the high debt and the negative equity. Margin pressures thanks to Donald Trump and the tariffs which he's been rattling about is not helping them. Then of course the morals within Dell and their workforce is of question right now, because they have laid off around 25,000 workers since 2023, and that is a huge layoff in the restructuring which they've been going through. So that begs the question to keep an eye on these 3 things. In terms of numbers and value, if you look at Dell's PE ratio stands at 17, PEG is at 0.95, which is not too bad. And is it at a reasonable value? Well, I would say it is a reasonable opportunity if you are willing to take a gamble. And here you have to listen to me why I'm saying if you're willing to take a gamble. Because the price currently Dell is trading at is at $113. If you look at it in discount cash flow, it is supposed to be at 142, and the relative value is at 118, placing the intrinsic value about $162. So if you see where Dell has really performed in the last month or so, since this Q1 results, from April 4th to now, Dell is up 56%. It's up $42. So is there a wave in Dell is the question. Should we be focusing on Dell? Now that they've announced a new product line and a factory they're going to be setting up with NVIDIA for these enterprise solutions and AI server farms, should we keep this on our radar and take this into consideration is what I want you to think about. And if we look at Dell like this, should we be looking at HP? I know HP we have not spoken about, and HP has been thrown into the corners of history. At one time, it was one of the most important companies. We do remember the fiasco which happened with Yahoo and that how it unfolded. But right now, should we revisit HP, taking this, what I'm talking about, Dell into consideration? Should we be deep diving into HP? Then when I'm talking about cybersecurity, should we talk about Palo Alto Networks, CrowdStrike, or SentinelOne? So what would you say, especially SentinelOne, which is focusing on AI-driven securities? Should we look into these companies and deep dive into this? This is what I want you to think about when I spoke about Dell today. I'm not asking you to go buy Dell. I'm asking you to think differently when we're talking about stocks, sectors, especially AI, where a lot of you have been messaging me on Instagram and WhatsApp saying that you feel that you missed out. I don't think it is something that's missed out. It's a question of being patient and looking and trying to unlock value. And if you do the thought experiment, like what I said, if you spread your eyes a little bit and you look, there are a lot of companies which are at tremendous value right now, which are allied to artificial intelligence and intelligence infrastructure in the first level, second level, which can be great companies to be holding on for the long term if you do the following. Keep in mind to check the PE ratio, see price to sales, see the price to book, see the dividend yield, see the free cash flow. All that is very important. Then you should get into the next layer of analysis, which should be the management team behind this company, the landscape. Where are they sitting in this whole AI landscape? Do they have a moat? Do they have something that gives them an edge? Then, of course, dive into the balance sheet and what is the prospect of long-term growth holding on to this company for 5 years, 10 years. Is it a kind of company which they say, like for McDonald's? There's an argument that's been said about McDonald's and companies like Coca-Cola, that is, these companies, you can always buy them at whatever price as long as you're willing to hold them for 10 years. If you buy McDonald's today and hold it for 10 years, you'll definitely see returns. I think that is rubbish. Like Charlie says, it might be a great business, but the price which you enter these businesses is crucial, and it's important, as important as the company too. So I'm not asking you to go buy McDonald's. Don't immediately say, should I buy McDonald's? I'm not saying that. We can study McDonald's if you're interested. I can do another video about that. But here is what I wanted to talk about today. How we should look at opportunities in the market. And if you do this, maybe you will be finding these cigar butts, as Ben Graham used to say, in the floor, where we can have another 1 or 2 puffs as investors and make some money. I hope you found this video interesting, and I hope you found it informative as always. Like I said, I'm talking about Indian stocks. For those of you who miss me talking about Indian stocks here on Be Rich on the YouTube channel, I am there on Instagram. You can find me. And I'm talking about Indian stocks there on Instagram and on WhatsApp and LinkedIn. But here we're trying to keep it only towards American stocks and Japanese companies, because we feel that we do a lot of Indian companies on our sister channel on MoneyPage too. So we wanted to offer something different here. Thanks for those of you who have been supporting me and saying, don't worry, Vinod, don't worry about the numbers. I personally do not worry about numbers and view counts. My team, Rupesh, does worry about these numbers, and he's been begging me to talk about Indian stocks just to give the channel a boost. I don't think we require any boost. We are doing absolutely fine and dandy, as my dad used to say. So anyway, thanks for all the love and affection and the support for this channel. Do continue watching it if you find this informative and interesting as always. Nothing else more to say. Tomorrow I'll see you with another video as we move along, as we get into the weekend, and hopefully it'll be something a little about personal finance. And on Sunday, I wanted to actually hit upon what are the companies you should be looking in June. So that video, please keep an eye out for on Sunday evening, which should be about what should be your plan for June and the 5 stocks you should be definitely buying in June in the US to see a great month, and especially how to navigate these tariffs. Thanks for watching the video as always. Good night.